Hello fellow traders, welcome to another tutorial episode. Thank you a lot for your support. Today we will talk about Bollinger Band. Bollinger Band is a very common and very popular indicator. It's another channel indicator. I don't want to confuse you with differences or similarities with many channel indicators like you probably see envelope, alligator, Keltner indicator. We have analyzed all of them in my tutorial videos. Every time that I'm making a tutorial, we will analyze only the particular indicator. You need to understand the mechanics and how each indicator works. This is a very simple indicator. It uses the midline, which is a moving average, the upper band and the lower band. Now, if you check, the prices will tend to remain in this band, in this river, if we could say. Here is a formula behind it. Like any other indicator that I am analyzing, you don't have to remember it. In the beginning, when you are newbies, you don't have to remember every single detail of the indicator, but as your trading goes on and on, you'll see that by your own, you will start making adjustments in the indicators, like the period, like the typical prices. You might use, instead of high-low close, you might use open high-low close, or the mid prices of two previous candles. This is something that it's up to you. This is the pure formula of the indicator. We have the upper Bollinger Band, which is the moving average of typical prices. We have analyzed what is typical prices. High, low, close divided by 3. A period of 20, this is the most common, plus standard deviations from the moving average for the last 20 period of the typical prices, and the lower band, it's minus the standard deviations of the last 20 periods of typical prices. This is the reason I don't want you to remember the formulas in the beginning. You can Google it very easy, you can find them. You can keep them as a print screen from my videos. I try to make them with colors just to make you understand easier what is in each representation, let's say. Now, we will open them in real markets, and we will see how this indicator works and what actually it is. I have already plot one here on the US yen. If you check here the properties, it's the standard period of 20. Now, the deviation is 3. Usually we are using 2. This is the deviation from our moving average, from our midline. Now, I have said that changing this parameter will dramatically change your indicator bands. If you are using 1, it will be very tighten. If you're using, let's say, 5, it will dramatically expand the indicator. Most people use 2 on a standard period of 20. I also adjust the period, but we will keep that in typical. Also, it's applied in typical prices, high-low close divided by the 3. You can do the weighted close, which is the open. You can do the weighted close. You see that this will change your indicator view. This is not so important what you will apply to. If you make the changes yourself, you'll see that this is not the important parameter. The most important is the deviations. Usually we are using 2. Most commonly you will use you will use 2. This is the standard deviations from the moving average. How we trade with this indicator? The prices tend to stay, we say tend because we are talking about when the market is in normal conditions. We don't have high volatility or high events. Depends, of course, of the entity that you are trading. Either it's stocks, assets, commodities, futures, binary. This is up to you. So the prices will tend to stay in this channel that is creating by the Bollinger Band. How this indicator works, you can use them with both ways. Either when the prices start hitting the bottom, it's a buy signal, and when the prices hit the top, it's a sell signal. Of course, this is an oversimplification that I am doing when I'm presenting the indicator. And not only this indicator, but any indicator. I have said that many times in trading. Do not expect to find the golden egg and the philosopher's stone from this indicator. Again, it's just an indicator. The most powerful tool that this indicator provides, it's the volatility measure and the standard deviations. We won't analyze them, but we will do a separate video for the volatility and the prices. But how this can work in your favor? When the prices or the channel width expands and contracts, when contracts and goes into smaller width, it means that we are in a period of low volatility. So the prices will burst out. The higher volatility is about to come. This is a signal that we've said that when the prices, when the market change momentum, change prices also. In this case, you can see in this example that the bands were starting to become closer and closer, and then it burst out. Of course, either the prices will go up, either the prices will go down. It's very good when you plot the indicator, follow the trend. Of course, this is a common knowledge of every trader. We are not going against the trend, even though there are techniques. And now here it's the same. Now the market stays in this channel. The volatility is lower. It depends on what you are trading. The volatility will also depend from the sessions, from the time, when the market is open and when it's not. I've said that I will make a separate video for prices volatility. Now what happened here? The channel becomes tighter and tighter, and now suddenly the prices expands, which means we have a higher volatility. And of course, this change the momentum and how you can see the market. It's Bollinger Band. It's a very good indicator. From the ones that using channels, it's one of the most popular, I would say. Maybe I would say alligator, but I have bias on that because Williams is an amazing person. So his chaos theory and the theory that he's trading affected me so much. So main idea remains. I mean, it doesn't matter what is the channel indicator that you are using. Now, I have said that many times, when you are using an indicator, you must be creative. You need to pay attention not only to this indicator, but even if you are willing to take a trade only by using this indicator, you must take in consideration other parameters. Now, how else you can use that indicator? We've said that we are using the trend. Now, of course, we see here that we have a trend. Unfortunately, we are always using live markets because market is something that you cannot easily predict. And you see now that I will use the same example on the USD yen. The price is hit at the lower channel, and this is a buy signal. Let's say the price is hit the top, but you see that the trend continues to the upside. So someone can be more creative and keep the trade until the prices hit the lower channel, and indeed the prices hit the lower channel here. Now our fellow trader, it was very lucky, and I say that it was lucky because now we are looking at trending market, and all the indicators, even a moving average, will work perfectly when the market is trending. But trust me, market won't trend all the times, and this might whipsaw your account, and this is the most dangerous part when you are plotting an indicator and when you will start to trade. Now our fellow trader is ready to start trading with this indicator, but the problems is that he will have many false signals, like each indicator. If he chooses to leave the trade when the prices hit this bottom, it doesn't guarantee that the prices will not continue to going up. And this is another example. Now, if our fellow trader here did the buy, now you see that we have a very strong uptrend because the prices are not even hitting the midline. Remember, the midline is a simple moving average. So if you are plot a simple moving average here, you will see that it's not so big difference. And here our fellow trader hit the prices in the lower, and probably she would leave the trade, but still the prices were hitting, going up and up. And now at this point we are at today, you see that we have a channel here that it's been created. So it's not a good idea to keep using it. But what can this indicator shows that since we are at this point with lower volatility, it means that most likely, well, it's a certainty that prices goes from periods of low volatility, high volatility, low volatility, and so on. This is a repeatable pattern. Now, in this case, that we are in the Bollinger Band, now we are waiting that the prices will expand. This is by default. This is for sure. And this is another technique you can use when the channel breaks up or down. I won't analyze any techniques because this is just a tutorial to make you understand what is the Bollinger Band and how the indicator works, because it measures the volatility. Another negative aspect of this indicator and many others is it is just another lagging indicator. This indicator cannot predict the prices. It will follow the prices. It's not like indicators like pivot points or Fibonacci that can expand and see some prices in the future, or they might be able to predict the future. Now, mechanistically speaking, this indicator, it's very useful. It's very popular if you want to plot the money diagram. By experience, again, I would say that since you are watching this video, of course you are new in trading, you need to watch my tutorials many times. If you want to leave a comment, since it's just a tutorial, you can just leave the comment if you didn't understand something. But the basic mechanic of this indicator is to show you how the prices can move into channels. The upper channel signifies a strong uptrend, the lower channel signifies a strong low trend. Now, when the price is moving significantly fast, you will see that the indicator has not the time to predict this is a strong downtrend. You see that the problem when we are seeing prices from the past, we are not able to determine how good is this working. I mean, it's good to back test a strategy or a technique. No one says the opposite. But you need also to be a bit more creative. Do not expect just use this indicator and make profit in the market. This indicator will give you false signals again and again, because when the prices change fast, then the indicator won't be able to go with the prices. Now the period is 20. If you put a period of 30, let's say, let's do that change to understand also the figure. You see how the indicator becomes slower in identifying the prices. The indicator becomes smoother. The more you change the value, the faster or slower MA you are creating, because I have analyzed that. I have analyzed the moving averages if you want to check my video. So practically this is the Bollinger Band. It's another channel indicator. Remember the most important things that how to trade with this indicator. when the prices contracts and the prices expands, these are the points that the higher volatility will turn into lower volatility. I hope you enjoy the video. Thank you very much for your support. Trade safe, and I hope I'll see you in the future.